let's start with consolidations in 2010, 11, and 12. As you could see, usually those kind of like cyclical stopping actions have multiple swings, ups and downs, ups and downs, ups and downs. And they usually start, with some kind of change of behavior. We were going up normally, and then some kind of reaction that maybe exceeds and shows some elements of the supply. In 2010, that was a flash crash. Then after that, actually right here, a flash crash. Then after that, there is some kind of final retest and final capitulation that happened in 2010, 2011, into 2012, backing up action that happened again in 2014, 15, 16, with 16 being a spring event into the final capitulation with increased volatility. We kind of see that volatility, the final volatility in those events, they are being created at the end. And then finally in 2018, 19, and 20 into the COVID low, we have the same, a change of behavior, a crisis into a liquidity crisis into the end of 2018, and then COVID itself, where we have the majority of the volatility coming exactly into the last leg. What is happening now? We are most definitely in the overbought, overthrown condition as we start this distributional process. But we are not really seeing capitulation here, which might suggest that we might be at the first leg of a much more complex structure. And that's kind of like this new idea that we want to introduce to you. How this complex structure could unfold, we yet have to see. And we'll make a case for this structure now transitioning right now from the first regime, which was a distributional regime, into more of the rally regime, and then it's going to follow again into the regime of a secondary distribution that might have that final capitulation. There are two ways of how the composite operator usually would take the money from the weak hands. Either the composite man would shake people out or tire them out. And as we don't see the capitulation event, so there is no a significant shakeout, at least for now, maybe it will come a little bit later and we will still be using 2008 analog. But wearing them out is completely different thing. Wearing them out is going to come through a prolonged ups and downs where the sentiment is going to shift from bearish to bullish to bearish again. And this is what's going to be so frustrating. And this is where people are going to lose a lot of money. So here is one of the scenarios of how we could touch this cyclical low before we actually resume a secular trend. Well, let's look at this from the perspective of maybe a historical analog. And this is very interesting. This is 59, 60, 61, and 62. Somebody sent me an analog from 55 and 56, and I believe that's not it. But 59, 60, and 61 into 62 low kind of makes sense to me. And at least for now, we could use this as a hypothesis. So what is going on here? From 1 to 2 to 3, we're developing some kind of distributional local structure. From 3 to 4, a major sign of weakness that starts creating, after the local selling climax, a trading range. 4, 5, 6, with 6 to 7 being that best rally in this trading range. And then we go into very interesting decline. This decline is deep and it's suggestive of another sign of weakness, but in reality, it just produces a very deep spring. And from there, after a short consolidation, we start rallying up. And this rally develops in a very interesting way as well. After the 18% decline, and please note that here we are declining 20% as well, so very close. What are we starting to do? Think about two things: no capitulation, like in the current structure, and what is the sentiment? The sentiment is of extreme bearish character. What is happening right now is the market. A lot of buyers of the puts. Everybody is right now on the side of the bearish sentiment. And usually that's when the composite man is saying, let me take the money off the table from these people. They are bearish, let me trap them in such way that their premiums are going to collapse and I'm going to take it. So imagine the rally currently in the market where we're overcoming the first high, we're overcoming, then we are creating some kind of test, we're overcoming that test, then we're saying, okay, we're going to go into this resistance area, the price comes here, and then it overcomes it again. How would the sentiment change? Most definitely from bearish to bullish very quickly. And people will start buying here and pushing the price up. And this is where the contrarian composite man is going to start selling. And that selling is going to start creating some kind of stopping structure. That's going to lead to what? To the final capitulation that will have all of the characteristics that we need. Increased volatility, lower low, the bearish sentiment that will be even more bearish than it is right now, and a volatile structure at the end of this capitulative event will do two things. A major exchange of shares will happen there, and also that volatility capitulation will happen close to this secular uptrend demand line, which also could be a cyclical low. So again, this is just one of the ideas that we have. And with that, Bruce, this kind of became a rant a little bit, but we're famous for having this type of rants at the beginning of the session. What do you think about this analog and any other ideas and thoughts on any of the previous slides as well?